The Sell America trade seems to have steadied this last week, with the US dollar recovering from multi-year lows and US stocks rising across the week. I'm Fiona Cincotta at StoneX, and joining me to discuss this and more is Global Head of Content at StoneX, John Kicklighter. Thank you for joining me, John. So what are the general market conditions that we're dealing with here?
If I were to encapsulate what we're looking at, it seems like a moderation of that heightened uncertainty, that high-level volatility, that jerkiness that you get in the markets that would kind of align to risk off if anything were to stir. And that's encouraging for people that look for stability, that look for a long perspective on capital markets. But I don't think it's necessarily gone away. It's just lower volatility, less sensitivity to headlines, unless you get the right headlines. And I think that you're probably going to see a lot of short-term moves. So if you get any surprises, let's say from event risk next week, or maybe the off-putting headline, it'll probably be a short-term burst, but not as much probability of follow-through. So that could give us a little bit more of our sea legs back and perhaps build some foundation of confidence, or if things fall apart again, bearishness.
So, John, what are the most important themes that you think could upend that calm for either the bulls or the bears?
So I'd say that you still have to keep eyes on trade wars. I mean, it's gone back and forth this past week, where it seemed that Donald Trump was thawing in his approach towards China. Kind of, I think, his perspective of reaching to the middle and saying if they reduce their tariffs, they would do so in kind. But Beijing was very clearly not going to give any leeway on that, and said that the U.S. would have to remove all its tariffs first, the unilateral tariffs, as they called it. So that is definitely rife for uncertainty and headline catalysm. Besides that, I would say the concerns of recession. That is the next stage of trade wars. Trade wars are just they're headline fodder, and yes, they will have some quite intense impact on markets. But if you want to see how it has an impact on the actual economy and financial system, you see it in that next stage. And I think we're starting to get it in the hard data. And I would say recession signals are going to be something to watch, especially after the IMF downgraded its growth forecast significantly this past week. And perhaps even the considerations of monetary policy. We're seeing some other central banks are starting to ease and reference tariffs as a reason why, and yet we see the FOMC kind of standing pat, waiting to see what the data suggests, and Donald Trump does not like that. So the back and forth on whether the president's going to tempt the legal status to see if he can oust the Fed official before his term ends next year.
So next week, there are a lot of events to be watching on the economic calendar. We've obviously got US GDP, we've got US core PCE, the Fed's preferred gauge for inflation, as well as non-farm payrolls. What do you think is the top event risk to be watching next week? And can these themes spur or kick off a new focus?
Yeah, so I think there's a lot of event risks. I would urge people to look at the macro calendar because it's pretty packed. But we need to choose what is meaningful day by day. I would say on Monday, we're watching for the Canadian elections, because obviously the current sitting temporary Prime Minister, Carney, is not very favorable in his assessment of the relationship between Canada and the United States. So we want to see how that plays out. But we also have the Mexican trade balance. So the North American trade considerations. And I think Mexico, according to the IMF, is looking at a recession forecast for 2025. So we want to see how trade is impacting it right now. It rolls into Tuesday, and Tuesday's going to have U.S. trade balance, U.S. consumer confidence, and some of the initial U.S. employment statistics, the JOLTS, job quits and job hires. So that's going to be a good mix of how is the U.S. doing, both at the front lines of trade wars, but also how is it spilling over into both employment and expectations for spending, which is what you get for consumer confidence figures. Wednesday, that's where we get serious. That's the U.S. GDP that you were speaking of. We also have the Chinese PMIs, which are a good proxy for GDP. They're government figures. People like to take those with a grain of salt, but it is a level set to see how the general mood is around China's economic health. And they have been trying to fortify their economy against these trade wars. So we want to see that. And of course, the Mag 7 earnings are going to really start off in earnest and continue the next day. And we're going to get Microsoft and Meta on after hours. So we're going to see earnings, how tech is being impacted by the trade wars, and it just generally has its finger on the pulse of general sentiment. Thursday, BOJ expectation or BOJ rate decision, but I would say look at the outlook. It doesn't look like they're expected to change, and I think that's pretty reasonable. But their outlook is going to definitely take stock of everything that's been going on. It's kind of like seeing the Bank of England or the Federal Reserve's forecasts. We want to register those to see what their expectations are with all the uncertainty in the market. But we have Canadian manufacturing, CAD PMI, the ISM, U.S. manufacturing activity, which is really the heartbeat that the U.S. is trying to restore in its efforts at America First, and we'll see if it's actually paying off in the measure. And then, of course, after hours, Amazon and Apple. I would say Amazon's more important for me. Apple obviously is the largest market cap, but Amazon is both that e-commerce and really impacted by trade, and also reflective of consumption. Then we rounded off on Friday. Non-farm payrolls obviously is the big one that everyone's looking for. However, that's just going to talk about the urgency of whether the Fed's going to be forced to cut rates according to President Trump, or if we see that balance between their dual mandates of inflation and employment really kicked off. But I would also say you have Eurozone CPI and you also have Hong Kong GDP. So some important data around there. Don't just watch non-farm payrolls.
Yeah, completely. And I think it's really interesting because we've got such a busy week whilst the markets are still at quite key levels. I mean, the US dollar index is still below that 100 psychological level that we're watching. The Dow Jones is just below the 40,000. So lots to be watching as those key levels are being monitored.
Absolutely.
Well, thank you so much for joining us again, John. We look forward to speaking to you again soon.
Thank you very much. Thanks for having me.
For more videos like this, please do like and subscribe.